Hi friends, welcome to my channel InfoCraze. In today's video, we are diving into some accounting basics which are very important for students and beginners in the field of finance and accounts. By the end of this video, you will have a fair idea on the basic activities involved in accounting. Before we proceed, please do not forget to show your support by hitting the like button and subscribing to my channel for more informative content like this. Now, let's get into the world of accounting together. Let's first answer the basic question, what is accounting? In a very simple way, accounting is the process of recording, summarizing, and reporting of financial transactions of a business entity. More explicitly, accounting may be defined as the systematic process of recording, classifying, summarizing, analyzing, and interpreting of financial transactions, followed by communicating the results to various stakeholders like investors, creditors, regulators, government agencies, and others. Thus, based on the above definition, various steps involved in the procedure of accounting are recording, classifying, summarizing, analyzing, interpreting, and communicating of financial data. Let's briefly understand each of these stages. First one is recording. It is the primary function of accounting which involves the recording of all business transactions of financial nature as evidenced by source documents. Recording is done in a book called journal, which may further be divided into several subsidiary books. Next is classifying. This step involves the systematic analysis of recorded data for grouping financial transactions of similar nature at one place in order to furnish the information in compact and usable form. The book containing those classified information is called ledger. Then we have summarizing. This step involves the preparation and presentation of the classified data in a specific manner which is useful for the internal and external users of a company. This process results into the preparation of financial statements such as trial balance, profit and loss account, balance sheet, and cash flow statement. The next step is analyzing. This is concerned with methodical classification of the data provided in the financial statements and establishment of relationship between various items of profit and loss account and balance sheet. Thus, analysis of the recorded financial data provides the basis for interpretation. Next one is interpreting. The recorded financial data, after being analyzed, are interpreted in a manner so as to help the end users to make a meaningful judgment about the financial condition of the business operations. Hope this is clear? Efficient interpretation of the recorded financial data will help the management team to take future business decisions correctly. Last is communicating. This is concerned with the communication of summarized, analyzed, and interpreted financial information to the end users of a company so as to enable them take rational decisions. This is done through preparation and circulation of accounting reports, which include profit and loss account statement, balance sheet, cash flow statement, and various other information like the statement of changes in equity, notes to accounts, accounting ratios, graphs, etc. Now, let's understand the term bookkeeping. First two stages of recording, classifying, and preparation of trial balance under summarizing stage are typically considered to be under bookkeeping. Rest of the activities, including the preparation of financial statements, followed by its analysis, reporting, interpretation, and communication to various users, are considered to be the accounting stages. Thus, bookkeeping is the systematic process of recording all the financial transactions of a business in an organized manner, consistently. Its primary goal is to ensure that all the financial transactions are accurately recorded and organized, which lays the foundation for all the subsequent accounting activities. Now, let's understand the term accounting cycle. Accounting cycle refers to the series of steps that begins with identifying and recording of all the transactions of a business and ends with the preparation of financial statements of accounts. The accounting cycle ensures that all the financial transactions are recorded accurately and reported during an accounting period in compliance with the regulatory requirements. Accounting period can vary between the countries, which may be influenced by legal requirements, regulatory policies, industry practices, etc. For example, accounting period in the United States is mostly the calendar year, which runs from January 1st to December 31st, whereas in India, it's from April 1st to March 31st. Typically, there are 7 broad steps in the accounting cycle. The accounting process begins with the identification of source documents, which are the original records of financial transactions. These documents provide evidence of business activities and include invoices, receipts, purchase orders, sales orders, bank statements, payroll records, etc. Once the source documents are received, the next step is to record the transaction in the accounting journal. The journal serves as a chronological record of all the transactions organized by date. Each transaction is recorded using double entry bookkeeping, which means that every debit entry must have a corresponding credit entry to maintain the accounting equation, which says that assets are equal to liabilities plus equity. After transactions are recorded in the journal, they are transferred to the general ledger accounts. The ledger contains individual accounts for each type of asset, liability, equity, revenue, and expense. Posting involves transferring the debits and credits from the journal entries to the appropriate ledger accounts, ensuring that each account reflects the cumulative effect of all the related transactions. Hope this is clear. Once all transactions have been posted to the ledger, a trial balance is prepared. The trial balance is a statement which lists all the accounts and their respective balances, debit or credit, at a specific point in time. The purpose of the trial balance is to ensure that the total debits equal the total credits, verifying the accuracy of the recording and posting process. After preparing the trial balance, adjusting entries are made to update certain accounts to reflect accruals, deferrals, depreciation, and other adjustments necessary for accurate financial reporting. These adjustments ensure that revenues and expenses are recognized in the correct accounting period and that the financial statements reflect the true financial position and performance of the business. Following the adjustment process, an adjusted trial balance is prepared to incorporate the effects of adjusting entries. The adjusted trial balance serves as the basis for preparing the financial statements. Finally, based on the adjusted trial balance, financial statements are prepared. All these steps in the accounting cycle ensure that the company's financial records are accurate and complete so that they provide the necessary information for management, investors, government authorities, and all other stakeholders to assess the financial health and performance of the business. The accounting cycle is repeated for each accounting period, which facilitates regular reporting and comparative analysis. With this, we come to the end of this video. If you find this video useful, please like the same and share it with your friends. For additional information on various stages in accounting, you may refer to my videos on journal and ledger as provided in the end screen. Please subscribe to my channel for many more interesting videos in the field of finance, accounts, and costing. If you have any question, please leave your query in the comment section. Thanks for watching.